What's going on, guys? Welcome back to the channel. In today's video, I'm finally going to be releasing my mechanical trading model that helped me make over $42,000 in prop firm payouts in a month. Now, before we get into the checklist, I do want to add a couple of caveats though for you guys to understand. So, first off, I don't actually believe personally in a 110% mechanical or systematic trading model if you are the person who is manually hitting buy and sell when getting into a trade. The reason I feel this way is because you cannot account for human error, all right? We're never going to be able to follow to an exact T a trading model unless you're utilizing a trading bot or an algorithm, right? I know that 95% of you guys are not using trading bots or algos. We're manually pushing buy and sell. So what this mechanical checklist can do for you though is keep you within the guidelines or a framework to follow that will keep you involved in looking for higher probability trades. And it does have a clear set of rules. So I just wanted to add that before we get into the checklist. And one other thing, guys, I just want to say, if you like my trading videos, if you appreciate me putting out all of this content for free, all I ask for in return is for you to subscribe to the channel, like the video, drop a comment, whether you have a positive comment or a negative comment. I want to hear what you guys are thinking and how I can improve in putting out this content for you. But anyways, let's get into the checklist now, and it's very, very simple. So number one, what we're going to be doing is trading either towards midnight open price if it hasn't been engaged yet for the day, or we're going to be trading away from midnight open price if midnight has already been engaged. This will become more clear once I get into examples, but pretty much look at the midnight open price as a line in the sand for being either in a premium or discount of the daily trading range. Number two, this trade setup is going to present within the time window of 9:30 a.m. Eastern Standard to 11 a.m. So only for that first hour and a half or so of the New York Open are you going to be looking for this trading setup. Number three, the entry. We are going to be looking for the first inversion fair value gap to present anywhere between a 1 minute or 5 minute inversion fair value gap. So anything in between. It could be a 1 minute, a 2 minute, 3 minute, 4 minute, or 5 minute inversion fair value gap for your entry. I personally like to stick to either the 1 or 5 minute, but I do use 3 minute inversions from time to time as well. Number four, if we are trading away from the midnight open, meaning it had already been engaged, then we need a clear draw on liquidity. By draw on liquidity, I mean some type of session liquidity like Asia high, Asia low, London session high or low, or my personal favorite, equal highs or equal lows. Again, I'll be going over a ton of examples. But we need a draw on liquidity if you're not trading towards midnight, if you're trading away from it. But if we are trading towards midnight, then midnight price is the draw on liquidity. But you get bonus points if we can recognize a second draw on liquidity as well, because the more confluence to a trade thesis, the higher probability it is. And last but not least, we will be targeting a 0.5 to 1 negative risk reward. Yes, negative risk reward, meaning if you're comfortable with risking $400 per trade, right? Then you're going to be targeting to make $200 on that trade. This sounds very counterintuitive to some people, but what it has done for me is allow me to keep my win rate extremely high, above the 80% range, and I can stack those base hits over and over and over again to get to that 40K in payouts. So that's what we're going to be doing today. I'm going to get into a ton of examples, so just sit tight and let's get into it. All right, guys, let's get into our first example right here on the charts. So first off, if we refer back to our checklist, what is step number one? Step number one, we are trading either towards midnight price if it hasn't been engaged yet, or we are going to be trading away from midnight price if it has already been engaged. So let me go to the charts here and help you guys visualize what I'm talking about if you don't understand. First off, the midnight opening price is very simply the opening price of the 12 a.m. candle. That would be 12 a.m. Eastern Standard Time. You simply identify that 12 a.m. candle, mark off the opening price, There's your midnight open. Now we're using the midnight open as a simple gauge to determine whether we are in a discount of the daily trading range. Let's make this green. Put discount here. Or we are trading above the midnight open, and we could determine that we are in a premium of the daily trading range. Let's write premium right here. So once again, if we're trading above the midnight open, then we are in a premium of the daily trading range. If we are trading below midnight open, then we are in a discount of the daily trading range. Very simply, it is easier to look for longs when the market is in a discount. It is easier to look for shorts when the market is in a premium. So that's step number one. And step number one really is the most important because this is going to help determine your directional bias or your draw on liquidity for the trade setup. That's why it's so important. And one of the powers of the mechanical trading model is that it gives you your directional bias as step number one. There's no higher time frame analysis needed, no daily bias analysis. You're simply looking for shorts if you're above midnight open, and you're looking for longs if you're below midnight open. So that is number one. Now let's clear this stuff off the chart and let's go over step number two. Step number two. The trade setup will present within the window from 9:30 a.m. to 11 a.m. So the first hour and a half of the market being open for New York session, that is when we're looking for this trade setup, not a minute later and not a minute before 9:30 a.m. So if we look at this price action, currently we are above the midnight open and it has not been engaged yet. So we are going to be looking for shorts for our trading setup within the hours of 9:30 a.m. to 11 a.m. Now, also, I do want to add that you can use a hard set time for when the market needs to have engaged midnight or not. Because you can see right here, the market did engage midnight during the London session and the pre-market a little bit. That's absolutely fine. We are using this as a gauge for our directional bias from 9 a.m. on. So if it hasn't been engaged or after 9 a.m., then we're going to be looking for shorts to trade towards the midnight open, okay? Because it is in a premium of the daily trading range. So number one, we have our directional bias, and we know the time window that we're going to be looking for our trade setup. Step number three, and this is why this model is so easy. We look for the first inversion fair value gap to present. That's going to be our entry. Again, this inversion fair value gap could be on a 1 minute, 2 minute, 3 minute, 4 minute, 5 minutes. Doesn't matter. This is where it kind of depends on the type of trader you are. For example, if you want to take 1 minute inversions, you're probably a lot more of like a low time frame scalper. Or you might want to take the 5 minute inversions if you're somebody that wants to use a wider stop loss and you want to have a little bit more confirmation for your trade thesis. That's where it kind of goes up to you. I don't use specifically one or the other. For me, it's all about what makes sense for that particular setup. But again, that's where the discretion is going to come in and your experience in the market. And there's nothing that's going to be 110% mechanical, but this is as close as I can get it for you guys. So there's actually two entries on the example that I'm going to show you. There's a 1 minute entry that comes first, and then there's a 5 minute entry that comes later. We're going to stick to the 5 minute entry on here, and I'll go over the 1 minute briefly afterwards. But okay, so we know that we want to look for shorts. We know the time window we're going to be looking from 9:30 to 11. And now we just need to wait for the first inversion fair value gap. If we're above midnight open and that means we're looking for shorts, then we're just going to be marking off the nearest fair value gap, the nearest bullish fair value gap, and waiting for it to potentially get inversed. Because as of right now, we're not just getting short right here because we're above midnight. We need our entry signal. We need to have some type of confirmation to actually trigger ourselves into the trade. So for now, we're just going to wait and play out this price action. So market makes another higher high, and then we get a little retracement right here. We retrace into that 5-minute fair value gap. Now, would we get short right here? Right here? No, we would not get short here. Why? Because we have not inversed the gap. The only way this will become an inversion is if this 5-minute candle closed beneath the 5-minute bullish fair value gap. So there's no inversion yet. This is why inversions are another really important part of the mechanical model, because it gives you the confirmation. There's no discretion. You either inverse that first fair value gap or you don't. So as of right now, we are not taking this trade yet. Let's play out this price action. Still no inversion right there. Strong wick below. This is why we wait for candle closures, but no closure below. We come up, wick below, close above, and now look at this. We're putting in another higher high. This is exactly why we wait for that confirmation. So for now, we're still just waiting. There's no trade setup that is presented yet. Now it is 9:45 a.m., so we still have quite some time until 11 that we can keep looking for this setup. Now, right here, what did we just do? We created another bullish fair value gap on the 5-minute time frame. So now, this is the 5-minute fair value gap that we will be looking to get inversed to trigger ourselves into a short. So we could get rid of this fair value gap that we had. Now our focus is going to be on this one because it's just whichever one comes first. So let's play out this price action. So we get a little retap into there. Still no inversion though, so still no trade entry has presented. Another retest, another retest. The market's really trying to hold up inside this fair value gap, but no inversion just yet. Boom. Right there, we get our confirmation. So this has now become a 5-minute inverted fair value gap, right? So we've inverted this 5-minute fair value gap. Now we have an entry. So how can we enter the market? There's two ways. Number one, and I think for the purposes of keeping this as simple as possible, especially if you're newer, the mechanical way would be to get short down here on the candle closure that inverted the gap. Now, you don't get in the middle of this candle. This candle needs to be closed and to have inverted the gap. That's the only way that the trade setup has actually confirmed the entry. So that's the easiest way to get in. One other way you can get in is you set a limit order inside the inverted fair value gap and you hope for a retest. Now, the problem with limit orders is you're not always going to get that entry. It might run without you. So if you want to get into more trades, if you want to be more aggressive, you want to get in on the candle closure, okay? Because you're not always going to get that retest into that inversion. Now, the benefits of waiting for a limit order to come back up and retap that inverted fair value gap is you're going to get a more optimal entry. So if the market wants to retrace up to here, you don't have to sit and draw down for another 5, 10, 15 minutes, whatever the case is. So that's a trade-off you're going to have to take. But let's use this example, getting in on the candle closure. Now, because we're trading negative risk reward, we want to have a wide stop loss. Your stop loss is very simply going to go, in this case, above the most recent structure on the 5-minute time frame. If you're using a 5-minute inversion fair value gap, then your stop loss is going to be placed at the structural high relative to the 5-minute time frame. So it's going to be all the way up here. It's about a 50-point stop loss. And what are we targeting? We're targeting 0.5 risk reward. So if our stop loss is 50 points, then our TP is at 25 points. Again, the benefits of negative RR is you are going to have a much higher win rate. Okay, so even though we ultimately want to see price trade all the way down here to the midnight open, doesn't mean anything to us. We're looking for negative R. We're trying to get our base hit and get the hell out of there. So let's play this out. So a little retest. So again, in this example, putting your limit order here would have worked out nicely. There's no way of knowing though, okay? You're never going to know if it's going to come up and retest. That's a judgment call. That's why I think if you guys are newer, just getting in on the closure is absolutely fine. But in this case, you would have gotten a much better entry if you waited for that limit order retest. But let's play out this price action. And boom, TP would be hit right here. This would be in 5, 10, 15, 20, about 25, 30 minutes, and you would have hit your TP. Now again, we don't care if it hits midnight now. we utilized our setup for the necessary reasons. We have our stop all the way up here. We got in on the confirmation candle of that inversion fair value gap. That was the last step. And we target 0.5 to 1 RR, right? That is all the setup needs to be a valid trade. Now, let me go over an example real quick that you could have used the 1 minute though. Because again, you could use the 1 minute, 3 minute, 5 minutes. It all depends on the type of trader you are. So if we were using the 1 minute, let's just replay this price action. Let's go right here. Again, we know midnight is all the way below here, right? So we'll keep that there. And we're just going to be marking off the nearest 1 minute fair value gap. As of right now, it's right here. That's the nearest 1 minute fair value gap that we would look for to get inversed to trigger our trade. So we get in, we get a retest, still no inversion. Coming back down here, let's see if we get an inversion. Market's holding up quite a bit. Drag this out. Still no inversion, guys. It's very important to follow the checklist mechanically, all right? You need to do it to the best of your ability. So no inversion yet, no trade. Right there. That would be a clear inversion. You could technically say this is an inversion, but I wouldn't take that one. Very simply, it's just not strong enough. This is a nice, strong 1 minute candle closure invalidating the bullish fair value gap. So once again, you would get in here. Based off the 1 minute structure, you can either put your stop here, or again, I just think it's safer up here. There's no reason. Just give yourself that extra points of room. And again, what is this? Another 50-point stop loss, 25-point TP. It's about the same type of entry. Let's let that play out. And bam, TP hit. Now, could your stop have been right here? Yeah, it would have worked out, and you could have had your TP a little higher up. But again, that's where some of the discretion comes in. Technically, your stop could be right here at the nearest 1 minute structure. But I like to just go with the obvious swing point, because when you're trading negative RR, you really don't want to give yourself room to potentially get wicked out of trades prematurely if you're going to be right on the directional bias. So, all right, that's example number 1. Again, checklist. We're either trading to the midnight open if it hasn't been engaged, or away from the midnight open if it has been engaged. In this case, market was comfortably trading above the midnight open since 9 a.m. with no engagement of the level. Number 2, the trade setup will present within 9:30 to 11 a.m. Our entry presented at 10 a.m., so still well within the window. Number 3, we look for the first inversion fair value gap to present, okay? Anywhere between a 1 or 5 minute. I just showed you guys 2 examples, an example on the 1 minute and an example on the 5 minute, and you got virtually the exact same trade. Number 4, if we're trading away from midnight, we need to draw on liquidity. If we're trading towards midnight, then midnight price is the draw on liquidity. Once again, midnight price was the draw on liquidity in this case, so that's what we're targeting. We're targeting midnight open. Last step, we will target 0.5 to 1 risk reward. Yes, negative risk reward. So in this case, about a 50-point stop loss with a 25-point TP. In and out, stack our base hit, come back tomorrow. So that's example number 1. Hope you guys liked it. Let's get into another example. All right, guys, so let's get into example number 2. Now, this is literally the day prior from the example I just shown you. Again, I don't need to cherry pick when this model works and when it doesn't. I could most of the time go over the last few trading days, and you're going to see a winning entry that presents with the mechanical model. So this is literally the day before the first example we just went over. So this is September 18th on Thursday. So first thing, of course, we mark out our midnight open. So that is right here, that 12 a.m. candle, opening price. We can mark that off, label it midnight. Cool. We have our midnight open. So first off, where are we in relation to midnight open? We're currently trading above midnight, right? So we're currently in a premium of the daily trading range. Again, when is it officially in a premium? From 9 a.m. on. So let's put a vertical line right here, 9 a.m. So from right here is when we are going to be gauging whether it's in premium or discount. So right here in the London session, it was going back and forth around midnight open. Doesn't matter to us. It's from 9 a.m. on. So right here, we are technically in a premium of the daily trading range, meaning Until we engage midnight, it's going to be easier to look for shorts, and we would look for the first inversion fair value gap to trade towards midnight. One thing about this example is we're very close to midnight right here at 9 a.m., especially by the time we get to 9:30. We're going to come in and engage midnight very, very quickly. So remember, if we go back to step one, we are trading either towards midnight price if it hasn't been engaged, or we're going to be trading away from midnight price if it has been engaged. The way we would instead be trading away from midnight in this situation, which would mean we'd be looking for longs, would be if there was no inversion fair value gap setup on the way down. So let's run through this example. Also, we could just keep in mind, where's the current structure? Again, you don't have to do this, but it's very obviously pretty bullish. So it might be easier to be looking for longs once we get below midnight instead of trying to catch the shorts here. But let's go over this. So let's play out some of this price action. So we immediately get a drive up. Remember to note if there are any inversion fair value gaps that present in this time window. No inversion. There's not a single fair value gap here that we could look to get inversed. Okay, so we immediately engage midnight before we get an inversion fair value gap set up to present. This also is shown on the 1 minute. Again, for us to trade towards midnight for a short setup, we need a 1 minute bullish fair value gap, right? There's not a single 1 minute fair value gap in here. No fair value gap. So this is when the mechanical model works really well. It did not give you an entry to trade down into this. And you know, in this case, I'm almost grateful for it because we're so close to midnight. You know, it's going to be hard to catch a good move from here to here, you know, especially if you have an inversion. Like if there was an inversion over here, it would probably be somewhere down here towards the bottom of the range. You're not going to get optimal risk reward. So I remember when this setup presented, I was actually very happy that we did not get that inversion entry towards midnight. I was hoping for something like this where we would actually engage midnight first, and then we could play the first inversion up away from midnight. So right away, we engage midnight. Let me bring this closer so we can see the label. Oops. There we go. And again, there's a 1 minute example and a 5 minute example entry. But where's the 1 minute entry? Right here, immediately after we engage midnight. So we have this bearish fair value gap. Once we get below midnight, if the setup did not present on the way down, we're now actually looking for longs, okay? As long as we get back above. So look at this. Bearish fair value gap, the first one that we're looking at. We immediately dip below midnight, which means we came into a discount of the daily trading range, right? This would mean we're in a discount now if we're below. We tap into discount and immediately inverse the first 1 minute bearish fair value gap that presents. So your entry, step number 3, this is how simple this model is. Enter on the closure of that inverted fair value gap, stop below the most recent structure. So this is about a 57 point stop loss. So what are we looking for? 0.5 to 1. Let's play this out. TP hit in 1 minute. Now, this happens all the time with this model. When you're playing negative risk reward, especially on the 1 minute, you're going to get in and out of those trades very quickly. This is the beauty of the model. Now, let's go over this one more time. I mean, let's just rehash everything. Market opens above midnight. So technically we were in a premium at that point and we'd be looking for shorts. Fine, that's fine. But we don't get a single entry to the downside. There's no fair value gap for us to be playing an inverse here. So instead, we wait, we remain patient. The market taps into discount, we get below midnight, and we get our entry to trade away from midnight. Again, why? Because the midnight price has been engaged. So we're now looking to trade away. You get that first 1 minute bearish fair value gap that presents. We immediately inverse it. We get in, market close, enter, TP hit within 1 minute. So just beautiful example here. And again, I don't need a cherry pick. I just went over the last 2 days of price action. Right now it's Sunday afternoon. So these are the most recent trading days and the mechanical model presented perfectly. But let's go over one more example from this day, because once again, we have a 5-minute entry as well if you're someone that doesn't want to enter on that 1-minute time frame. Once again, no 5-minute bullish fair value gap that gets inversed here. There's just no entry. So we get that sweep, we tap into midnight, and where is the first 5-minute fair value gap? Let's get rid of this one. Right here, 5-minute fair value gap. Let's label that. So right here, this is now the fair value gap that we want to see get inversed. Is there an entry here yet? No. Why? Doesn't matter that we wicked above the fair value gap. This is why we wait for candle closures. We're not going to enter until we get a 5-minute candle closure back above this gap. Right there. There's your entry on the 5-minute time frame. Let's enter that right here. Now, this is where also, remember I talked about identifying another draw on liquidity? You get bonus points if you can identify another draw on liquidity in the situations where we're trading away from midnight. Because again, when we're trading towards it, midnight open is our draw on liquidity. We don't need anything else. But when we're trading away from it, you're going to have a higher probability setup if you can identify some type of draw on liquidity, based off the price action. So what do we have? For the 5-minute time frame, we have these equal highs right here. Right? Perfect equal highs off the 1 minute. Let's label that. So you have a draw on liquidity. Cool. So we have everything. Again, checklist. In this case, we're trading away from midnight because it's been engaged. It has to occur within the hours of 9:30 a.m. to 11 a.m. What time is it right here? 10 a.m. Number 3, we wait for the first inversion fair value gap to present anywhere between the 1 or 5-minute candles. We went over that 1-minute inversion right here, but also there was a 5-minute inversion a little bit later right here. We also have these 1-minute equal highs. There's our draw on liquidity, right? In that case, we'd be looking for that secondary draw on liquidity when we're trading away. Last step, we target 0.5 to 1 risk reward. Yes, negative risk reward. Let's play this out. So in this case, we have a 100-point stop loss, 50-point take profit. Straight to target. I mean, just beautiful entry, beautiful execution, showing how well the model executes. And again, I'm not cherry picking anything. These are the last 2 days of price action. So, all right, let's go over one more example just to really drive it home now. All right, guys, so let's get into our last example of the day. So first off, we want to mark off our midnight open price, right? Let's go back a little bit right here. So midnight open, we have that marked off. That's our 12 a.m. candle opening price. Again, you could use an indicator if it's easier for you, but very easy to find that midnight open. We mark that off and drag it over here to where we're going to be currently trading. Step 1. Let's go down to this 1 minute. We need to determine if we're going to be trading towards midnight or away. So right here, this vertical line, this marks off 9 a.m., right? So this is when we're going to be looking. We want to trade towards midnight after 9 a.m. Well, that's done, right? It is immediately engaged within the first couple minutes after 9 a.m. So we're not looking to trade towards midnight. We're looking to trade away from midnight. So now, what's step number 2? Trade setup has to happen from the window of 9:30 to 11 a.m. We're still within that time window. And again, step number 3, we look for the first inversion fair value gap to present between a 1 and a 5 minute. So as of right now, do we have a fair value gap on the 1 minute that occurred after 9 a.m.? As of right now, we don't have any fair value gaps anywhere, really. And we got to wait for 9:30. So let's play this out to 9:30 open. One more candle. Okay, that's 9:30 a.m. So now, let's mark off the first inversion fair value gap that we see occur. As of right now, this is the only fair value gap we have. So you can see right here, market retested it, drove higher. As of right now, all we're looking for is for this fair value gap to get inversed. Why? Because it's above midnight. Midnight's already been engaged, so we want to trade away from it. Play out this price action. Right there. Was that an inversion fair value gap? Yes. Why? Because this 1 minute candle closed beneath the first presenting fair value gap in the time window that we're looking for our trade. So here's your trade. It is that simple, guys. Stop loss would go to the swing high of the most recent structure. How big is this stop? 22 points. We're looking for 0.5 to 1 minute time frame entry. Let's play that out. Boom. TP hit again within 1 or 2 minutes. That simple, guys. Again, there's a 5-minute entry as well. Usually you're going to see a 1-minute entry and a 5-minute entry present. So again, that's up to you to decide which one is better for your trading style. Or you could even be using it in the sense that if you miss the 1-minute entry for whatever reason, keep an eye out for that 5-minute entry, okay? It's still going to be valid when you get that 5-minute entry. So let's look for the nearest 5-minute fair value gap to present. Right here. What do we have? 5-minute fair value gap. Inverse. We inverse it right here on this bearish 5-minute candle, right? 2 ways to trade this now. You take an entry right here at the close of that candle, stop above the structure. That's a 40-point stop now. You're obviously going to have a bigger stop loss when you're trading on the 5-minute time frame, as opposed to if you're looking at that 1-minute entry. You're usually going to have a tighter stop loss most of the time. But still, this is the trade. 5-minute inversion fair value gap, closure, market enter, target 0.5. Once again, you have hit your TP in the first 5-minute candle. It can be that simple, guys. So there's the mechanical trading model. Again, just really simple things to follow. Trading towards midnight or away from it, depending whether it's been engaged or not. Number 2, trade setup presents within 9:30 to 11 a.m. That's it. We don't look for it a minute before or a minute after. Number 3, we look for the first inversion fair value gap to present, and we take that trade in the direction that the first step gives us. Number 4, if we're trading away, just again, going over it, we need a clear draw on liquidity. If we're trading towards it, midnight price is our draw on liquidity. Last step, we target 0.5 to 1 risk reward. Boom, 2 entries. Each example I have shown you, there's been a 1-minute entry, and then there's been a 5-minute entry that has followed shortly after. That's usually how it goes. So you have 2 opportunities to use the mechanical model. And also, I just want to go over, what's the date here? Wednesday, September 17th. So again, today's Sunday, September 21st that I'm recording this video. All I didn't have to cherry pick anything. I just showed you guys the mechanical model working in real time in the most recent last 3 days of price action. It presents over and over again. Go do your back testing, do your own research, but this is as simple as I can give it to you guys with some clear guidelines to follow. So that's it for this video. One last thing, guys, I just want to let you know that if you are looking for a prop firm to trade with, I have a code with Tradeify, which is the best straight to funding prop firm in the industry, and you could use my code, which is ZARB, Z-A-R-B, to get 30% off right now. Link in the description of the video, and I'll see you guys next time. Take care, peace and love.